The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And right off the bat here, we've got a lot to talk about today, and we've got Joey Zhang with us from Hong Kong. Joey, you there?
Hey, John. How you doing?
Good, man. Good to have you with you, right? Good to have you with us right at the start of the show here. A lot to talk about today.
Pleasure being here. It's all happening again. I'm so happy because for a while the whole market was brain dead. It was extremely boring.
I think we're in for some volatility finally.
Fantastic! I can't wait.
Oh yeah.
That's how we make money.
And by the way, if you're seeing me, I lost a bet, so I have to wear this UNC shirt today. I told somebody that was the other side of the downside of the bet, so my friends at NC State are, laughing, I'm sure.
You're wearing blue and white right now?
I'm wearing a shirt actually with the UNC emblem on it to boot. So it's Carolina blue, and there's a UNC emblem on it, and this is sacrilege, but I got to do it. Hey, listen, got so many things to get into here. Where would you like to start?
Well, I mean, we have the U.S. elections, we have Brexit, we have the dollar breaking out, we have gold breaking down, we have the Chinese renminbi going for another run. So, there's a lot to talk about today. Right.
Okay, so last time you were on, I think a lot of the things that we spoke about are kind of developing in that direction that we kind of slanted it towards last time. So let's go right into the dollar. I've got the dollar up right now. You're probably going to see a little bit of a delay. And here's that, long-term dollar kind of breakout. And I want everybody at home to kind of take a look at this. And Joey, you'll be seeing it in just a second there. So, last week we talked about, targets being met 97.16 and then kind of backed off, and then you got a buy supported by the breakout. So now it's Thursday. More than likely, it looks like we're going to have a Friday close possibly above 97.16, Joey. And where does this thing end up going?
It's going 100 for sure. Now, beyond 100, we'll have to see, because 100 is a very important level. And if it breaks 100 and closes the week above 100, then then it's happy days, and we're gonna have a lot of fun. But until then, I think from here to 100 is still enough fun, or more fun than we've had for a long time. So I'm just happy that we have the prospect of going to 100.
Okay. That being said, which a lot of other things kind of fall in line after, that declaration. Let's take a look at gold. Here's we had the big bad breakdown, I guess, at 1296 there. And that was where it was kind of okay to be short, not okay to be long on the long term. But now on the daily, I'm showing our daily chart right now, and this is all in the scanner, folks. 1252, bottom of the profile, 1278.5 top. Dollar's been making higher highs, and gold's kind of been hanging in there. So where's the short-term and the long-term trade on this one, in your opinion?
For gold?
Yep. Got gold up right now.
Yeah. So gold, we've been spending too much time below the 200-day moving average. It should have bounced right off of the 200-day moving average. Instead, we've broken through, and then we've actually been spending a few days below the 200-day moving average. And with the dollar breaking out, now the gold that actually led all other currencies in breaking down first versus the dollar.
Okay.
And now you have it was gold and the sterling, the British pound breaking down first. Those two broke down first, and then you had the other currencies following, the Japanese yen, the euro, all following. And now what I'm thinking is that it's creating a down flag, and then eventually going to break through 1251. And if it closes below 1250 on a daily close, then we might have I really think that we're going to revisit the 1200 level.
Okay.
And 1180 to 1200 is very much in sight. I think at the very best we can bounce up to 1270-ish, 1278, which is the unfair high.
Right.
I don't expect us to actually bounce up that high.
Okay.
But it could happen given the move is fairly abrupt down here. But I still think that the crowded trade is not on the short gold, but it's actually on the long side. So, and because it fell so fast, I don't think enough people got out. So that's why I think even with such a small bounce, it still hasn't bounced above the 200-day moving average yet.
Right. So in a nutshell, that big technical breakdown below 1296 happened. We had the weekly close below. It's spinning around down here. If you kind of take the profiles out of play for a second, it's what Joey's saying is we're kind of consolidating down here, which is, that this is the first part of a possible move even lower. But what's going on now is you basically are kind of in this fair auction right now, and you've got resistance areas basically at 1278.5, or breakdowns, especially closes on breakdowns below 1250, 1252, and that's your kind of lines in the sand when it comes to picking battles on gold. I'm just summarizing what Joey said right now. That kind of also, kind of makes me want to go over to the currencies for a second, Joey. And what I've got up right now is the euro. And if you're looking at the TFNN site, and you can see the chart, I know you're not in the den right now, but I'm showing the weekly on the euro. We finally busted below that 111.43 POC on that big wide weekly profile. We're trading about 110.37 right now. What's your thoughts on this one? Because if the dollar's got some more oomph in it, what are we looking at on this one?
Now, one thing is the first week of December we've got the all-important Italian vote coming up.
Okay.
And I cannot see that. So in the last few months, the euro has almost been flatlined. So we're going into a high volatility state in the euro very soon.
We're going to go to another break. Can you hold that thought and come back with us?
Yep.
Great. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We've got Joey Zhang on with us right now. Joey, still there?
Yep, still here.
I got to show this picture before we continue here. This is one of the reasons I've been out the past 2 days. I'm showing the landscape around the eastern part of the state in North Carolina. This is a photo. This is a bridge very near my house, Joey. And the dam just completely busted. And a lot of the bridges around here are just washed out. So I was helping some folks past couple of days. It's just, I mean, if you get on the news, North Carolina just got hammered. And half the bridges around here literally are not even there anymore. It's just wild. Some people in some dire straits around here. Some towns are just completely, like Seven Springs near here. It's about 15 miles away. Just unbelievable carnage.
Man, I hope things. Yeah, that's starting to happen more and more often now.
I know. It's, that was the last time that happened here around this area. It's supposed to be a 100-year flood. That was like 10 years ago. And now there's another 100-year flood 10 years later. Yeah, it's definitely saying something. But listen, let's get back to the euro here. So what you were saying, where this thing may head. I mean, you've got 108.86, bottom of the weekly profile. What's the fundamental and technicals on this one?
Well, I mean, we've been in such a low volatility environment in the currencies of late, especially the euro. The euro has been the least volatile of all of them, and if you look at the daily chart on the euro, we've literally been in a flat line for the last few months. So we're just returning to a natural volatility state right now, and we've got the U.S. elections. We've got there's a huge news of, well, it's not news, but there's a huge news of the new regulations going in for money market funds. That's causing LIBOR to actually go up as well. So that's got an effect on the dollar. Plus, we've got the Italian elections and the vote, and if there's a negative euro vote from the Italians, and all the Italians have already seen what's happening in the Brexit. I don't know whether they're going to vote for that or not. Who knows? All I know is that the polls are 50-50 right now. And so, and that's right around the corner for December 4th, I believe. I don't know if I have the date right, but first week of December. And so leading up to that, we're going to get into a massive volatility state. And I think the volatility is going to be on the downside because, the dollar's broken out against all the other currencies. The euro needs to catch up to the sterling. Because if the sterling is going that badly, I think with their Brexit, then certainly the possibility of Italy, France, Spain having negative votes later on. If that's the case, then it comes unraveled very, very quickly.
Well, yeah, I mean, I'm a little. I mean, if I was betting on the Italy thing, I would say they're going to probably do the same thing as Great Britain. They can control their own currency. You've been there before. Nobody seems to really work. Maybe that would be a good thing. Maybe that would be a good thing. Kind of get back to work and control their own currency, let it cave in, and sell some goods. I mean, I don't know.
I think the EU has been very, very heavy-handed. I mean, you've seen their rulings with Ireland and Apple. I mean, Ireland doesn't even think that they owe, Apple owes anything, and yet EU is saying, yes, you do. You owe, how many billions of dollars. And
to feed the mothership, yeah.
Exactly, to feed the mothership, and it's just ridiculous what is happening there. And I don't think anybody likes it. So they're ruling without any kind of. I mean, none of these guys are voted in by the people or anything. I don't know how that's going to work in the long run, to be honest.
No, it's going to bust apart the seams. And I'm with you on this euro trade. I've been hedged short forever.
Exactly.
In a waiting game, and it's just I
remember last week you were saying, thank God this is finally happening, and I said I think out of all the times we talked about this has the highest probability of it actually happening.
Yeah, this could be 1,000 pips relatively quick.
Yes, and despite actually a weaker jobs number from on last Friday when we talked about it, despite or Thursday, last Thursday we talked about this. Despite a weaker than expected jobs number, we had a small blip down on the dollar right after the numbers came out, and then all of a sudden, it came right back up, and that's the sign that we're really in a new phase in the dollar, which I really think that we have a very strong possibility of getting to 100.
No, I agree with you fully.
Beyond 100, I'm hoping it goes to 120, but I don't think that's going to happen. And then the euro would be back at 80. That would be awesome.
I would love it if the dollar went to 120.
Yeah,
that would just
the euro would be back at 80, and the sterling would be parity, and the Brazilian real would be somewhere up at 5 or something like that. And
well, let's hit the pound while we're in the European neighborhood here. We talked last time about, I think you were mentioning maybe 120, 121, something like that. So I think we pretty much have gotten back down into that 121 area. We hit it yesterday and the day before.
Yeah, I said the very minimum would hit 120, 121, and worst case for the short term at least is that we retest the 118 level, which always happens with these flash crashes. That's not a flash crash, right? Because yes, it was a flash crash, but it wasn't a 100% a technical flash crash, because whenever you get a 100% technical flash crash, everything recovers back to where it was right before, right? And it never did that. Whenever you see that, it means that somebody actually pushed the button to cause the flash crash, which was, a human being had to push the button to cause that thing to happen, basically, which means that people were already behind the trade, and so it never recovered even close to where it was prior to the flash crash.
Okay. Can you stay on another break?
Yeah, sure.
All right, guys, we'll be right back. Joseph Jung.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were finished. Have Joseph Jung on with us in Hong Kong, and we were finishing up with the British pound. I think the message there is pretty clear. Got a new profile attempting to appear on the daily, so going to have some new inflection points to kind of lean on there. Can we get into the Japanese yen?
Absolutely.
All right. So this is another one you were pretty bullish on. So it's up. So where are we headed now?
Yeah. So dollar yen. Let's see. Hold on 1 second. Yeah, dollar yen definitely just broke out of the daily and weekly. We're back retesting the breakout line again. We need to finish this week above 104. If we
Okay.
can finish this week above 104, then we're basically in a new kind of and actually, yeah, we're looking at some very good support right here, right around the 103.50, 103.80 level is good support.
This
We
kind of
we
faked,
broke
kind of
out
faked,
yesterday.
kind of faked this out about 2 months ago with that same action, but it was a little premature. Um,
Yes.
I'm with you. I think this one's for real, and I actually love that support area now that we've busted out and are retracing back down into it, 103.50. I'm all in on this one, man. I love it.
Yeah, I mean, the retracing is a great time to actually get into the trade, because
Absolutely.
on the initial breakout, you know what
You don't want to
what we
chase it.
always
Yeah.
do is look for the retrace, and here we are.
That,
So unless the retrace, and with the retrace, you already know what your downside is, which is 103.40, 103.50.
right.
If it gets below there again, then we're talking about potentially a reversal. So at the moment, this is looking like a very attractive trade at 103.80, and hopefully by the end of tomorrow we close above 104 or 104.20, and this way that this confirms the dollar breakout. This confirms the euro breakdown, and confirms, and let's see how, if gold actually ever makes it back above the 1263, I think is where the
Right.
200-day moving average is.
Mm-hmm.
So if gold is not able to close above that tomorrow, then we're going to look for another leg down next week.
Okay. While we're talking about metals a little bit there, can we hit copper, because copper's just getting hit right now? And I was a big fan of this thing reaching up into 226.18. How bad of an impact does the dollar have on this? And then, the Fed, I love their rhetoric. I mean, the minutes yesterday where the new word is relatively soon. That I'm saying that in quotation marks, but that's like me saying it seemingly looks good. I mean, like, these are all weird words that they throw in there now to.
They do.
Jesus
I
Christ.
mean, this is a repeat of last year, and literally at the end of last year, we were going through the exact same pattern, because the Fed was about to raise rates, and then after they raised, I mean, we're basically getting into the same exact scenario as last year. So if you look at the forward bond expectations on bond yields, they're, after this hike, people are actually not expecting any more hikes for a while, which is why I think that the dollar probably will stop somewhere around 99 to 100.
Gotcha.
Because people aren't expecting that. Now, if the elections, now, the one thing that people aren't looking at is the elections in the U.S. Not only is it the presidential elections, it's the House, it's the Senate. We've got a lot of election activity going on, so there's a lot of things that can go wrong there that people aren't expecting. So that's why I think overall volatility is going to go up into November and December, and then once we get past December, maybe markets start rallying again, and then we get back on the happy trade again.
Well, what about this copper trade? I mean, is there any?
I think the copper trade, we're near kind of production costs and stuff. I don't think we go down too much. I think we go down a little bit, and then and we find a base. I really don't think we're gonna really crash on copper. I think oil probably has some downside, given the fact that oil has rallied so much from 38 or so up to 51 again. So I think oil can fall down and trade in this range for a while. I don't think oil is gonna necessarily break out right now in the face of a stronger dollar.
Gotcha. So the copper trade's not, probably not going to be like a massive heavy situation here.
I wouldn't necessarily be huge short in copper, just because I think copper's gonna. I mean, copper's already near the bottom end of the range rather than the top end of the range, so I wouldn't necessarily think that copper's just gonna, fall through cliff or anything like that.
Well, let's move to crude because I'm with you. 50 was kind of the Maginot line for me on this one, and I know it was kind of recent high a couple of months ago. I'm with you. I still believe the trade is to just be patient and wait till we get a weekly close again below 50. Is that kind of where you're at on this one, or?
Yeah, me too. Oil is one of these things where you have so many political news that you have to look at, whether it's Syria, whether it's the Middle East, or Russia saying that they're going to cut production. So there's so many things to look at for oil. I just don't think that oil is ripe to break out right now. So I think if it's not ripe to break out, then we're at the top end of the range. Then I would rather be shorting oil up here, or waiting at least for a breakdown below 50 to short oil.
I'm with you.
But I don't think oil is necessarily going to go back down to $30 or anything. I think it probably will trade in a range of 52 to 42, which is a big enough range to trade and make money.
Without question. Let's go to Big Mama now, the S&Ps.
Man, the S&Ps, I don't know. It's pointless trying to trade the S&P. I'm not long the S&P right now. I'm just I don't want to be short the S&P. I don't want to be long the S&P. I don't want to have anything to do with the S&P.
There are much easier trades out there for sure. There's so many things against this right now, though. I mean, again, it's broken so many hearts on the short side for so many years consistently. But when there's tenuous situations to pay attention to, and you got some tenuous situations.
I've tried going short the S&P so many times, and every time it goes down 1 or 2, 3%, it bounces straight back up. So I never make any money on those shorts.
Yeah.
I don't lose much, but I don't make any money on those shorts. So.
Can you hang tight one more break, and
sure.
That will be awesome. Okay, guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We've got Joseph Jung on with us from Hong Kong today. He's been nice enough to stay on the whole hour. And Joey,
a lot to talk about, and it's great to be on.
Yeah, cool. It's always good to have you.
I'm glad you're still above the water over there.
Yeah, man, it's crazy around here. God, the bridges are just washed out in a lot of places. Rivers and places.
How are the chickens and the crops in the backyard? That's what I want.
Oh man, they're surviving. This is, I guess, the relative high ground. But not a lot. There's some carnage around here. A lot of farms are literally underwater. The S&Ps, we were kind of digressing, talking about the S&Ps. We went through that 2133 area and kind of retraced back up into it. Those are the weekly unfurlows. Now the daily, the next kind of situation down here is 2108.50, the way I see it. Yeah, I mean, I haven't really. I'm with you. What you said earlier. There's much better things to put mental capital towards, I guess, lately, and the S&Ps can be frustrating. They've just, in some instances, not really done what they were probably supposed to do. But if somebody's going to force you to get into the S&Ps, what's the strategy with these things, and what do you even look at to try to trade them right now?
I think equity volatility is going to go up.
I believe that.
So I would be buying puts. But the skew is so badly to the put side that you're going to be buying some very expensive puts. Maybe do a calendar spread to cheapen it. I think that's probably the best way to go on, or just simply buy the VIXY, VIXY, ETF. I think I would just do that. I mean, that's probably the easiest trade of all.
I got an interesting indicator 2 days ago, actually. Some folks in Chicago, I was kind of calling around and, hey man, what's going on? What are you guys looking at? Blah blah blah. I called it, a couple of friends of mine who own prop firms up there. So one of them extremely large and they do very well. He said, John, we're not allowing anybody to go overnight long. Only you can go overnight short right now because this thing's going to come down finally. He goes, the whole firm has a rule right now. You can only do intraday longs because they feel like something is getting ready to happen, and pretty smart guys too. So I'm taking that as, smart guys. Chicago is kind of a blue collar trading situation. They're, usually don't take on big bets up there. It's more of an arbitrage game is kind of the name of the game up there. And they're like, man, there's no way we're allowing one single trader to go long overnight right now. So that was kind of that was interesting to hear that.
Yeah, exactly.
So
I think, volatility is probably the right way to play it. Because either way, I think volatility goes up into the elections. And like I said, the Italian
How can it not
vote as well.
You know?
I don't. It always does. Every
Yeah.
single election, it's gone up 5 percentage points or so.
Yeah, but they're not focused on whether we're going to put $2 trillion into a defense program right now. They're focused on, which is really wild, which means, bigger things are coming to force volatility in the political scene. Now, I mean, if you and I were talking in private, we can't even say, based on what Trump's going through right now, and I don't respect the guy too much anyway, but we can't even privately say, hey, that girl's hot. We have to say now, wow, she makes me think of rainbows and butterflies. That's like, there's so much crazy stuff going on right now that's caused, I mean,
Okay. Yeah.
I'm sorry, maybe I went in the wrong direction there, but I mean, it is crazy what they're focused on right now, And you got a choice between a guy that's just he's coming unglued at the seams, and the other side is pretty much a full-blown criminal. I mean, like, how can this end good? I mean, the choices are not that
That's
great.
why this volatility is near the all-time lows right now. Yeah, we've had a small move up in the last few days, but nothing to what I think this could go to.
Yeah.
So anybody who's short volatility right now should really think twice about it before.
No, you got to be a nut. Steve Banger was actually talking to me yesterday about that trade, and yeah, I mean the volatility's been creeping up as we've been kind of going into almost a low price kind of range situation, and he was showing me a bunch of things yesterday. I was like, man, wow, this is setting up for some type of move. And I really feel like the move this time is going to be on the downside. The internals kind of rolled over. I mean, I've been looking at the scanner and looking at what's going on with the different sectors. I think some things are finally pointing south here. I'll tell you what. Can we look at Apple?
Yeah.
All right.
Well, Apple's breaking out, but all the news is already known, so I don't see how Apple can continue to go. Obviously, Apple's breaking out because of Samsung, and there's stuff, but all the news is out. Unless Samsung tells us tomorrow that they're gonna shut their doors, then Apple will break out to $200. But I don't see that happening. So all the news is already out. Yes, people are ordering more iPhone 7s than originally expected because nobody can get a Galaxy 7 anymore, right?
Yeah, and most of the world
that's already
uses
known.
Most of the world uses Android. I mean, outside of the United States, I mean, I think 74% of the world uses Android devices, and so it's not like that.
If anything, I'd be buying, I don't know, HTC in Taiwan or Lenovo that's traded on the Hong Kong exchange. Those are the ones that people are going to be buying. They're not necessarily going to be straight switching to Apple 7s. So
I don't know.
I don't know. I like Apple. I love Apple. I have 2 iPhones. I haven't switched to the 7. And Apple's near high, and I think it's already, it's already gotten all the good news out. I don't see any other good news coming out.
Yeah, I mean, it can only it's got a limited kind of upside based on what you just said. We've got a new profile around 115 unfair highs. We had a new profile this week, so that's the major place to play defense on the short side. If we can reverse and get below there, guys, that's what I'm seeing.
Yeah. I wouldn't short it unless it fell below there and then closed below there, basically.
Correct. Yeah, let somebody else figure out the top. This is all about making it an easier trade, folks. Let's take a look at Tesla, and if you can hang out through this next break, we can finish the show together. How's that sound?
Excellent.
All right.
It'll be the first time we finish the show together.
Yeah. Guys, be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pezzavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We've got Joseph Jong on with us from Hong Kong, and it's been a joy. We got about 4 minutes left, Joey, and I've got Tesla up right now.
Yeah,
Tesla. Yeah, let's hear about this one.
I think Tesla's been caught in a tight range. So 192 to I guess 12 is the range. It's tight for that one because it's obviously a very volatile stock. But there's still a lot of uncertainty surrounding their Solar City acquisition. And recently, Elon Musk just said that they don't have to do another round of fundraising before year end. Does that mean
is that because he's going to be mining gold on a moon on Saturn soon? Is that the newest
they're
thing?
going to be mining something much more valuable that hasn't even gotten a name yet. So it's not gold, it's not diamonds. It's something that we don't even have a name for. Something that he, can create a black hole into the next universe. And so, that's going to be a lot more interesting for Tesla. So if you want to see the next breakout, it's when he discovers one of those things. But until then, he might have to fund Solar City, which is big loss maker right now. And if that continues, then we're going to see a breakdown below 192. and then we're gonna see retest of 150 or so, which was the previous low back in February, 140, 150. But frankly, it's just gonna take time to integrate the companies. I think anybody who questions a brilliant guy like that is kind of like questioning Steve Jobs before. Yes, he's made mistakes before, but eventually he's righted his wrongs, and everything's taken off. So in the short, this is not a short-term trade. Tesla is a long-term trade, and if it ever gets down to 140 or so, I'd be buying the heck out of it. But until then, I'm just kind of waiting and watching to see how this whole Solar City thing plays out, whether he does another round of fundraising in the first quarter, which if he does, and depending on how big it is, it might get the stock back down to 150 level. I don't know if it'll ever get down to 140, but that just depends on how much money he's raising.
Well, he's really good at doing those little exposés on his thinking, and then people just throw money at him. I mean, never seen anything like it.
I'm sure people will throw plenty of money at whatever round of fund he's raising next.
It's like hypnotizes people. I've never seen anything like it.
Well, you've seen it with Steve Jobs, so
that's true.
He does. I don't think he does as good of a job as Steve Jobs, though. I mean, Steve Jobs was still the ultimate hypnotizer of all time.
True. Hey, we got about 30 seconds left. Let's hit silver. I got it up on the screen now. Kind of similar looking to gold. 1738, bottom of the profile on the daily, 1818 up top. Is this thing just kind of, is it looking at gold? Is it kind of doing a mind of its own? It's like a mirror image on the chart of gold right now.
It is a mirror image. I'm still relatively negative on gold and silver in the medium term. So I don't know. It really does need to close below this 200-day moving average, which is right at 1738. 1725, sorry. 1725, it needs to close below there. Otherwise, we're just locked into this trading range.
Got it. Joey, it's been our pleasure. Thank you, folks, for listening today. We'll be back again tomorrow.
Thank you, guys. Thank you, John.
Yep.
Take care.
All right,
and speak to you soon.
Thank you, Joey. Stay tuned for Larry, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.